Hello everybody, firstly I'd just like to welcome you to this webinar where we'll be talking about the first phase trade deal and the impact on the markets. My name is Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, first off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand that it's solely your decision whether you trade on market opportunities or not. So here is an example of a market opportunity. You can see some fundamental analysis on what's going on with crude oil. In this case, you can see we had a downtrend opportunity over a weekly period, since our analysis suggests crude oil would fall. At the top, you can see some geopolitical events and fundamental analysis that can influence the price of crude oil. For example, the part on Saudi Aramco restoring its production to full capacity soon after an attack on its oil supplies, and downward pressure on crude due to the trade war. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 56.786 that you can see on the left-hand side of the screen here, this shows the right moment in our estimation for opening a trading position. That's how you decided to trade on this opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further down. At these points you can put a stop loss and take profit, and on the right hand side of the screen you have calculations. If you close the position using take profit, you can expect these kinds of profits at the support levels in green. If the price is going against you, then you can potentially have a loss of this amount at the resistance levels in red. Finally, profit and loss calculations are based on a one-lot trading volume. So, the trade war, a quick history. A potential conflict has been brewing between the US and China for some years. There has been a recognition among economists, politicians, and the wider public that it's a matter of time before China challenges and then overtakes the US as the world's most dominant economy. The US does not want to give up this title and believes China is taking advantage of the country. President Trump and others have long accused China of stealing jobs from the US economy. This accusation goes down well with the public. However, there is a better argument regarding the theft of US intellectual property, basically involving Chinese companies stealing ideas and designs from a successful US product and creating their own cheaper version. Since the trade war officially began in June 2018, the US has slapped tariffs on $550 billion worth of Chinese products. China in turn has placed tariffs on $185 billion worth of US goods. So how has the trade war impacted the markets? Well, stocks have been negatively impacted alongside crude oil. The dollar has generally gone up, and trade war has provided support to gold and the Japanese yen. But remember, these general rules are about negative sentiment on the trade war when talks break down or new tariffs are announced. Progress in trade talks or the delaying of tariffs tends to have the opposite effect. Crude oil should rise, stocks should go up. In a moment, I'll show you how the trade war has affected crude oil prices and stocks and gold. But let's get up to date on what's led us to this point and how this has affected the instruments that you trade with. So progress in on-off negotiations between the US and China has been slow. Progress was made in December 2018 when the US and China negotiated a temporary truce of 3 months as the two sides worked towards a deal. The 3-month deadline was extended on February the 24th, 2019, when President Trump announced that the deadline would be extended. After months of talking on May the 5th, Trump threatened increased tariffs, and both the US and China added additional tariffs in the following months. In June, the US and China agreed to reopen trade talks, which are followed by more tariffs. But on September the 5th, China and the US agreed to talks again. After lower key talks, the US and China have parked some major issues for a later day and have decided to focus on a mini or first phase deal, with a view to reaching a full deal in 2020. Such a deal would likely involve the scaling back of existing tariffs and a Chinese commitment to purchase between $40 to $50 billion of US agricultural products. Reports suggested that the US and China were more likely to sign a deal in December. Despite some progress, there are disagreements even within the US negotiation team on whether or by how much existing tariffs should be reduced or cancelled completely. So let's take a look at 3 instruments, the S&P 500 or the USA 500, gold and crude oil, and see how the trade war has impacted prices. So, as I mentioned a moment ago, in December 2018, a truce and suspension of tariffs were announced. You can see how stocks reacted, skyrocketing almost 22%, and then reversing direction after new tariffs were imposed by the US, to which of course China responded. You can also see on the right that the index has powered ahead by over 6% to an all-time high since new talks were announced. As most of you know, gold is a safe haven instrument, so we would generally expect gold to rise in times of uncertainty and potential economic difficulties. You can see here on the left the line marking the announcement of new tariffs in May this year. Gold skyrocketed by nearly 22% until the beginning of September, when US-China trade war talks were announced. Since then, gold prices have fallen. Crude oil prices are also very much affected by the trade war, since an extended trade war will negatively impact the global economy, which will reduce demand for crude. But other demand and supply factors impact crude as well, so crude movements aren't as clearly correlated with the trade war. But you can see here, after new trade talks were agreed in September, that crude prices jumped up to 16% over the next 2 weeks or so. After the first phase deal was proposed on October the 10th, you can see another clear reaction from crude oil, which has pushed 6.75% higher over the following month. The most recent market-moving statement, which shows how important any trade deal is to investors, took place last month on December the 3rd. President Trump was in London at a NATO meeting addressing reporters. Answering a question, Trump said he didn't believe that there would be a trade deal between the US and China before the US election in November 2020. Both investors and reporters were shocked at this new information. So let's take a look at the immediate market reaction on gold. As you would expect, safe haven gold immediately jumped on the news, going up by 1.29%, before recovering towards the end of the trading day as Washington officials insisted that Trump wasn't aware of the progress being made. Later, President Trump stated that the US and China were close to a deal. USA 500 or S&P 500 index fell when it opened. Trump's statement took place in London earlier in the day, so the impact was felt immediately by stocks before some recovery throughout the session. Again, as you would expect, crude oil fell sharply lower by some 1.69% on the news. But crude prices recovered later in the day on reports that OPEC would be discussing deeper supply cuts at their OPEC meeting, boosting prices. Happily for investors, fresh tariffs which the US was due to impose on China on December the 15th were cancelled. Instead, US and Chinese officials revealed that they have come to agreement and intend to sign off on the delayed first phase deal in January. And the good news continued, as over the weekend of the first week of January, it was confirmed by multiple sources that a Chinese delegation will travel to the US on January the 13th, and that the first phase deal should be signed in the days following. But the content of the deal is said to be far from comprehensive and leaves a lot of work to be done on a full trade deal. But the key to investors is for existing tariffs to be rolled back or cancelled until a full deal is agreed. It is the tariffs that are doing damage to the US, China, and the global economy. So if tariffs are cancelled, this is likely to boost crude oil and stock prices. On the other hand, if only a couple of tariffs are rolled back, this would not restore the confidence of investors, who are already concerned at the increasing likelihood that there will be no full trade deal in place until US elections in November are held. In this scenario, gold and silver might benefit. Well, I hope you found this webinar useful. Of course, at Fortrade, we'll be following ongoing developments to do with the trade war. Please get in touch with your senior account manager for further information. And until next time, please join us again at Fortrade soon.